Doing our coverage for us at Bloomberg Intelligence, joining us around the table here in New York, Santosh Rao, Manhattan Venture Partners, Head of Research. He joins us now. Santosh, always great to catch up with you.
Great to be here.
What you do is facilitate trades in private markets for clients. The thing I've heard again and again in the last 24 hours when Uber comes up, as it comes to public markets, is I don't get it. When people ask you that question several years ago, what did you say to them?
Well, we said, exactly what's the truth, which is it's an emerging market, emerging sector. Transportation as a service is going to be big. We saw that well ahead of others. And we love the product. So we said, there has to be a winner and a loser. We thought Lyft would be the winner, only because it's a pure play. They just wanted to stay focused in U.S. They have a balance sheet that is debt-free, fully funded. So I think they can allocate resources much better than Uber could. Uber has exposed so many things outside the U.S. with too many global variables, and not necessarily that they have a clear shot at that winning everywhere, because there is competition with the local incumbents everywhere. Ola in India. So it's an expensive proposition to grow international. So we said, this is where it is. Lyft, we want to get in. Plus the valuation was always reasonable with Lyft versus Uber.
Are we learning from these issues, though, that actually the big opportunity is in private markets? The game has changed over the last 10, 20 years. If you want to capture the growth, you've got to get in a whole lot earlier.
Right. Yes, you have to, and it's not easy to do that. The very few players, unless you're very early in the funding rounds, it's very difficult to get in. But you come to places like us, Manhattan Venture Partners, where we facilitate that. We help people get in early. We have funds that help them. So I think that's where you come in, and that's the opportunity out there. And we see a lot of takers on this.
That's the pitch for you, but I just wonder how much the Lyfts and Ubers of this world upsets that now. Because we finally had a real test for these companies. Will public markets validate the valuations that these companies got in private markets? The answer so far for Lyft is a screaming no. Why does that change?
No, I want to go back a little bit. I think Lyft's valuation is correct now. We always thought it's closer to $60 rather than 72, 74, and then went up to 80. So IPO pricing is always there's a lot of froth in there. So I think this is where it's at. So right now you're seeing that both of them are around 4 to 5 times. I mean, his multiples, the one earlier, is much higher. But looking forward, which the market does, based on 2020 revenues, they're both closer to 4.5 times sales. I think that's where you want to be. That's where the bankers thought, and they realized that they cannot really go ahead of that. And kind of Lyft put a kind of boundary to Uber's valuation in the IPO round.
The path to profitability. Why is Lyft so much more convincing to you?
Well, I think I believe ride-hailing is all about North America. This is where the market is. Okay, outside there is. I mean, Uber has a big chunk of its market outside. But in U.S., they're very competitive with Uber, and they can allocate their resources much better. Plus, they have a much better go-to-market strategy with the autonomous cars. They have the hybrid approach of doing it in-house plus third parties. It's helping out. You saw that with Waymo coming on the network this quarter. They announced that. So I think they're much faster in terms of that. They're much less expensive than what Uber is doing. So I think in terms of the resources, I think Lyft is much better positioned than Uber is.
When can they reap the rewards of that partnership with Waymo? How long is that going to take?
It'll take a while. I mean, there's still regulations have to catch up and all that. But I think the trialing is going on. They're already introducing it to the market. So I think that'll go on. But the key is to get there correctly. You don't want to go in there and get into all the accidents and all that. So I think they're just making sure all the dots, everything is tied up correctly.
Finally, Santosh, what's your message for people looking to buy into this IPO as it lists?
Pretty much. You have to decide, do you want to go with a pure play with a clear path to profitability, or do you want to go with a global player with a lot of variables and not yet defined and pretty rich overall in terms of valuation?
Santosh Rao, always great to catch up with you. As always, thank you very much, sir. Coming up on this program.